Hello, everybody, and welcome to the LikeATortoise channel once again. Very happy to have you all here. And today I want to talk about PayPal, which released earnings yesterday, early in the afternoon. And I tuned into the conference call immediately afterwards, and I have a ton to go through. So, we better just get on with it. Initially, the market reaction was fantastic, as you probably know if you are invested in PayPal, and many of you, judging by the comments that you have been leaving, I know that you are. So the market reacted favorably, and the stock jumped some 50%, but then it settled with a modest 4% gain. So let's talk about what exactly happened, what my thoughts are on this report and on the company going forward. Am I going to continue to be invested in the company? Am I starting to sell some shares? Let's discuss that. So by and large, I think this was a very good report. Okay, and the reason the stock then reversed, ended up giving back many of those gains is because of some comments made by the CFO during the Q&A session, and but we will talk about that later on. But overall, I want you to understand that I'm very bullish on PayPal, and this report is just it's just a testament to what the company has been doing over the last several months, ever since Alex Chris took over in 2024, and I do believe that the turnaround strategy is definitely in place, and that many great things will happen to this company going forward. Okay, so look, there's a ton to unpack. I of course went through the entire report. I went through the presentation right here, but I took the liberty to condense everything into a Word document, as you can see right here, with the main information. This is where what I want you guys to focus on, and of course I will then highlight some of the essentials from the some of the visuals that I think are important for us to keep in mind. Okay, so PayPal stock soars on earnings and new OpenAI partnership. Okay, interestingly enough, the new OpenAI partnership, this was announced this was announced about half an hour, or I think it was half an hour, 45 minutes before the earnings released. I don't know if this is a coincidence, but it certainly added more fuel to the fire, and I think this is quite bullish. Okay, so let's talk about that. So PayPal Holdings reported third quarter earnings and revenue that topped Wall Street estimates. The results driven by broad-based profitable growth across branded experiences, PSP and Venmo, alongside the announcement of a new OpenAI e-commerce partnership, sent shares up nearly 10%. At one point, as I mentioned, they were up 15%. Then they settled with a 5% gain at the end of the day. Okay, so what were the financial results? They beat analyst estimates across the board. Net revenues were up 7% year over year, 6% if you discount currency, if you discount forex changes. Transaction margin dollars were up 6%, also beating estimates, excluding interests on customer balances. What does this mean? Essentially, PayPal owns some interest on the money that the customers have. And so if you account for that, then transaction margin dollars actually increased 7%. But why do we exclude that? It's because it's not really related to the core of its business. Okay, so we want to focus on the core of PayPal's operations. And if you just include the core, so they were up actually 6%, which is good. Okay, again, topping estimates. And the transaction margin dollars is a very important profitability metric that PayPal uses very often. In fact, I even mentioned it here so you guys can have an idea. Transaction margin, how do you do that? You essentially, so you take revenue and then you subtract all direct costs. Okay, so transaction expenses and credit losses. This is a measure of core transaction profitability that PayPal uses very often. Then, if we talk about the GAAP operating income, this was up 9%. GAAP operating profit margin expanded to 18%. If you just do the non-GAAP operating margin, it contracted to 18.6%. We will talk more about this when I show you guys the income statement. GAAP EPS was up 32%. Non-GAAP EPS only up 12%. Cash and cash equivalents and investments of around 14.4 billion. This is a company that is gushing cash, which is something that I love. And look at that, total debt was only 11.4 billion. So this is a company with a solid balance sheet, a company that could essentially pay off all the debt only from its cash and cash equivalents, which are, as you know, current assets. And capital returns 1.5 billion through share buybacks in quarter three, 5.7 billion over the last 12 months, reducing weighted average shares by 6%. This is incredible. If I go here, you can see, let me show you this. This is PayPal, as you can see. If you look at the trailing 12 months, you can see that the shares outstanding continue to decline nicely. In fact, if I show you here on Stock and Lock, now that we are on the topic of repurchases, let's wait for this to open. Come on. PayPal. Let's go here to financials. And you can see, let's go here to the income statement, diluted shares outstanding. You can see that over the last, since 2022, you can see that the number of shares reduced by almost 16%. So this is incredible. This is a company that understands that the stock is very cheap relative to its fundamentals, and they don't stop delivering value to shareholders via buybacks. And over the last, since 2022, they reduced the share count by 16%, which effectively makes this company a cannibal stock, essentially. They are eating themselves alive. And this is something that is going to unlock a lot of shareholder value. And sure enough, as a result of the aggressive buyback policy, we are seeing positive per share metrics momentum. I do expect that to continue over time. Any growth that we will see in terms of revenues, free cash flows will just be the cherry on top of the cake. Okay, so very good. Also, let me go back. Okay, I want to discuss this. Okay, right here. In terms of operating results, what were the main things to keep in mind? Total payment volume increased 8%. If we don't account for foreign exchanges, you can see that it was also above. In fact, so it increased 8% and it was above estimates. Growth accelerated from 6% in quarter two, which reflects improving transaction momentum following earlier repricing at Braintree, which is unbranded. If you will remember, in the last reports, this is something that was made, that management made available to the public. They were always very transparent about the fact that they wanted to reprice Braintree, because initially what happens is they were giving away, many of those services. In fact, they wanted to prioritize higher volume, but not necessarily profitability. This was with previous management. Now things are shifting. So because that didn't work, what the new management team is doing is they want to reprice Braintree. So they want to get rid of low margin transactions, even if that affects revenue in the short to medium term. They do believe it's going to unlock a lot of profitability and sustainable growth going forward. And I explained this in the last video. So this is something that I do like as the repricing at Braintree continues to unfold, right? I do expect this growth to accelerate going forward as well. Now, payment transactions were down 5% year over year, and payment transactions per active account were down 6% year over year. And in fact, they were down 2% versus quarter 2025. And at first glance, you may consider this a negative, but you really have to look under the hood. What is causing the payment transactions to decline? I know I mentioned that here. These declines reflect PayPal's price to value strategy, prioritizing higher value, higher margin transactions over sheer volume. Remember that lower revenue and lower volume transactions are a trade-off for better transaction margin dollars. So remember, profitability is what PayPal wants to focus on as well, and not just high volume. Not just high volume. So because of that, if you can see that if you exclude payments service provider transactions, which are part of the unbranded business, you can see that payment transactions actually increased 7%. Likewise, payment transactions per active account would have increased 5% if you exclude payments service provider and branded transactions. And this is a transition that PayPal is focusing on, and because it's not that they are not increasing. In fact, I will show you that the payments service provider is actually increasing slightly. Well, it has increased from quarter one, but it has decelerated substantially over the last many quarters. And the reason is because, again, they want this to be accelerating the most instead. Branded PayPal and Venmo transactions. These are accelerating, which suggests a higher average transaction value and a healthier revenue mix going forward. Okay, so I do see this decline actually as a positive, considering what the main emphasis is. Okay, so I was expecting this to happen as well. Active accounts only grew sluggish growth, as you can see, only 1% year over year to 438 million. What's important here to understand, as you will remember, is that active accounts for many quarters remained stagnant, and at one point they even declined. But now, ever since Alex Chris took over, we are seeing active accounts going up, even if this has been sluggish growth. But this is a positive also because remember that PayPal is a very large company. I mean, they have, this is due to the law of large numbers. So they already have an ecosystem. So they already have 438 million active accounts. And for them to increase this at 20%, I mean, it wouldn't be possible. But I do expect this to accelerate, considering all the partnerships that PayPal has been entering into over the last several months. Transaction take rate declined from 1.68 in quarter two to 1.64% in quarter two. This was due to product mix and FX edge impacts. And then online branded checkout. This is what analysts really want to emphasize because it's the core. It's the core of its business. Okay, it drives the most profitability, and it's probably the most important aspect of PayPal's business. And the growth continues to be flat. So yeah, versus quarter two. In quarter two, they delivered 5% year-over-year growth. Same thing in quarter three. which is consistent with company guidance for mid-single-digit growth amid continued competition from Apple Pay, Shop Pay, and other integrated payment platforms. And Chris has mentioned many times that they want to turn this around as well. Okay, and ultimately, via all these partnerships that they have been engaging in. Yeah, I do think this is going to allow the online branded checkout to accelerate as well in the future. Some of management commentary in market context. CEO Alex Chris, you guys took over at the end of 2023. He continues to execute on a turnaround strategy aimed at streamlining unprofitable, low-margin businesses. Management noted that growth is now coming from more diversified and profitable drivers, highlighting Venmo and PSP profitability improvements. In fact, if I go here, this is the presentation that was released, and you can see that PayPal's growth is diversifying. Okay, and where is this? Win checkout. This is buy now, pay later. Look at Venmo. I mean, Venmo is growing amazingly well. In fact, if I show you this here, look at that. Venmo increased in quarter 3 2024. It was at 8%. In quarter 2 2025, it increased 12%, and now 14%. So Venmo continued to accelerate. And this is bullish because I think this means that revenue will begin. Venmo will begin to contribute ever more to revenue, and I think that's very good. In fact, you can see that as a percentage of the total, Venmo is also increasing, which makes a lot of sense. You look at the branded experiences online and offline from 6% here to 8% right here, but then branded checkout remained pretty flat at about 5%. Okay, and what I was telling you about payment service provider, which is part of the unbranded part of PayPal, this declined from 12% to 2%. Yeah, and now it accelerates to 6%. But you can see that the branded experiences are actually accelerating in relative to the payment service provider business. Okay, and okay, what did I want? What else did I want to cover? Citi analysts emphasized PayPal's two-sided network and strong brand as enduring competitive advantages, but noted that branded growth remains the key metric to watch, as a significant re-acceleration has yet to materialize. So this is part of what the bearish narrative has been, is that for them to see ultimately all these partnerships and all these things that PayPal has been doing need to reflect need to translate into a higher branded acceleration, and which has yet to materialize because it has remained pretty flat. So they want to see the branded checkout business to accelerate. And after the initial post-earnings rally, shares pared back gains following cautious remarks from CFO Jamie Miller. So what exactly did he say? He said he flagged softening consumer spend trends. He said that average order values declined in September across the US and Europe on the back of tariffs and a lot of uncertainty that we have been seeing, particularly among retail consumers. And he actually he mentioned that this trend has continued into October. The good news is that even against this backdrop of softening consumer spending trends, they still raised guidance. So this, let's say the consumer now on the back of lower interest rates, which are this is expected to happen as well. Let's say that the consumer actually starts spending more. What happens is this will be very bullish for its guidance, and ultimately they will have to raise guidance once again in the next quarter. But right now they already raised guidance against this backdrop, which is very positive. I mean, look at that. So forward a 2025 non-GAAP EPS between 5.35 to 5.39. This is up 15 to 16% year over year. Very solid growth. Does this look like a company that is dying? I don't think so. They still increase the profitability very nicely. The earnings per share increased very nicely, as you can see. And I like that because it's also a reflection of PayPal's buybacks. In fact, if I show you this here, let's change this to quarterly, and you can see that on a quarterly basis, this is already quarter 3. You can see that net income declined slightly from 1.1261 billion to 1.248, and despite that, you can see that earnings per share diluted increased from 1.29 to 1.30. And this, again, look at this. Very nice. It's been going up, even though net income took just a small dip this quarter. And this is a reflection of PayPal's strong buyback program that are creating a lot of value for shareholders. Okay, and so let's continue with our documents. The transaction margin dollars, they are guiding for $15 between 15.45 to 15.55 billion. That's plus 5 to 6% above prior guidance. Also very good. Non-transaction operating expenses were up about 3% year over year. Okay, and the free cash flow, they are still guiding for 6 to 7 billion. That is expected, and they are on track to achieve that, because if I flip this to the cash flow statement on a quarterly basis, look at this great jump from free cash flow. Look at that, from about 692 million to 1.72 billion. This is because, as you know, they have the way. This is because one of PayPal's businesses, as you know, is loans, and so PayPal. What we are seeing right here is not. Sometimes you see periods where they have negative free cash flow, as you can see, which is not really accurate, but it has to do with the differences in how working capital works for PayPal. So this is something that we should understand. And for example, likewise, this is also an outlier, 2.40, about over 2.5 billion. So yeah, it doesn't. You have these outliers every now and then, exactly because they mentioned that in the conference call, and it's also mentioned in the report. Share repurchases, approximately 6 billion planned for forward 2025. 6 billion planned. I mean, at the current price, this is again going to unlock a lot of value. And this is quarter 4 2025 guidance. Non-GAAP EPS from 1.27, 1.31. Transaction margin dollars, again plus 2 to 5% year over year. And now let's talk about some of the strategic partnerships. But before that, I want to show you a few more things right here. Let's go to the report. What else did I wanted to show you? I wanted to show you. I already covered most of these things that are important. Yes, look at the free cash flow. Okay, it jumped substantially year over year to 19%. The year over adjusted free cash flow jumped 48%, and they mentioned that. So if I go here, so return to 1.5 billion capital shareholders, I already discussed that. generated 3Q adjusted free cash flow 2 billion with adjusted free cash flow 4.3 billion. So this is a company that is certainly not dying, and definitely a company that is going to continue to create a lot of value going forward, which is part of the reason why I'm so bullish. This is the guidance. Let's have a look. I already told you about this as well. This is active accounts grew 1% year over year. We discussed this. Okay, the strategic initiatives again, which is also very good. So growth is diversifying, and you can see that win checkout consistent contribution to growth. The scale Omni and grow Venmo. This continues to be a priority for the business. Drive a PSP profitability, payment service provider. And so contributing to transaction margin growth and reaccelerating transaction and the TPV growth post reset, transaction loss impact. Let me scroll down. What else did I want to share? Advancing strategic growth drivers, part of the branded experiences. You can see that branded experiences, the total payment volume increased 8%, as you can see. Look, compared to the quarter 3 2024, and look where we are right now. So it has been a substantial improvement on a quarterly basis, and exactly because the online and omni-channel experiences have been improving as well, which is something that I like. Branded experiences, this is buy now, pay later. Look at this. Expected 2025 buy now, pay later total payment volume around 40 billion, which is up 20%. Very, very good. So this segment of the business is working very well. They mentioned in the conference call that they see a big shift towards this trend, and part of that, and I don't know if you are a PayPal user, but what they do is they are rewarding consumers, right? So they offer them, for example, a 5% cashback offer on pay later purchases in US for the holiday season. So these cashback incentives are as they are, exactly as an incentive for people to use more of their products. Okay, advancing strategic growth, also deepening Venmo. As you know, Venmo increased at 20% year over year. So expected 2025 Venmo revenue around 1.7 billion, also accelerated substantially from 2023 as part of all the changes the new management has been implementing. I mean, look, this again is a company that continues to drive a lot of profitability, a lot of growth, and I'm very bullish. And you can see that PayPal world, this is also shaping the future of e-commerce. Look at all these strategic initiatives, PayPal world, agentic commerce, ads, which is going to unlock a lot of value, crypto, and also stable coins, all part of PayPal's goal to transition from a simple transition from a payment solution software provider to a full-blown e-commerce giant. Okay, so very bullish. If you haven't noticed yet, what else did I want to share with you? Also, PayPal mentioned that they will be starting a dividend program. The board of directors approved the initiation of a quarterly dividend of about 0.14 per share, payable December 10, 2025 to shareholders. This means a 10% payout ratio. Look, am I okay with the dividend? I would rather them to just continue to buy share backs as long as the price continues to be as depressed as it is. I think that would unlock further value. But I know that many people just chase the dividend, and so this should attract dividend payment shareholders, right? This should attract shareholders that just will never invest in companies without them paying dividends, essentially. So it can unlock future growth as well going forward. And what about the OpenAI partnership? PayPal becomes the first payments wallet integrated into ChatGPT. This is a big deal because it's again it's another step towards agentic commerce, and I think PayPal is going to be a main player in that field. Users can now complete purchases directly with ChatGPT using PayPal. So, for example, if you are looking for boots, let's say you are looking for looking, I don't know, for a lotion, whatever it is, you can type that into ChatGPT, and they will give you those options, the products, and then you can click on the product, and the checkout will appear immediately, and you will be able to buy with PayPal. So using PayPal, while merchants can list and sell their inventory through the platform, with ChatGPT's 800 plus million weekly users, this partnership positions the company as an early mover in AI-driven e-commerce and the key facilitator in OpenAI's push to materialize conversational shopping. Okay. In summary, PayPal delivered a solid quarter marked by stronger than expected earnings, improved transaction profitability, and the pivotal OpenAI partnership. However, declining transaction costs and slower user engagement highlight ongoing competitive pressure and consumer spending softness. The focus on quality over transaction over quantity remains paramount to PayPal's long-term strategy, and early signs of improved mix suggest this shift could strengthen core margins over time. So I understand why these transactions declined, and I'm constructive because I looked under the hood. I know why that happened, and management pointed that this would happen exactly because of the shift from higher volume, low margin profitability to lower volume but higher margin transactions. Okay, and this is it, guys. I mean, I don't think I think I already covered most of the essentials, and I remain very bullish, as you guys know, not least because the PE ratio continues to be very depressed, and I'm seriously considering adding more shares to my current position, and because I think I do think this. I think this company is going to continue to improve. In fact, if I go here to forecasts right now, in fact to statistics, you can see, look at that. The earnings per share growth forecast is projected to be around 16% over the next 5 years. And this means that this company is trading at where is the PEG ratio? The PEG ratio, if you just assume, so if you assume the PEG ratio is actually lower than 1, is actually under 1, which is a sign of cheapness, because they are expecting earnings per share growth of 16% over the next 5 years, and you can see that the PE is currently stands at 14, which is below 16, and so that will translate to a PEG ratio under 1. And look at the forward PE. I mean, this is incredible. Still trading at 13 times, despite with improved fundamentals. And if I show you this here, you can see that revenues on a quarterly basis, again, never stopped. So going up, they are going up as well. Yeah, and you can see in terms of profitability that gross margin on a quarterly basis, gross margin continues. Let me change to the quarterly. It decreased slightly, but on a yearly basis, you can see that it's going up. Likewise, operating margin is going up. Likewise, profit margin. It took a little. It took a breathing right here, but the free cash flow margin, for example, on a yearly basis from 2021 is also going up. Improving margins, improving fundamentals, and yet you can't give this thing away. I think this is a recipe for great things to happen in the future. Okay, so guys, I'm very constructive. I'm certainly not selling any shares, and let me know if you like this analysis and if you want me to explore anything else in further length in future views. And yeah, man, I mean, if you like it, just smash the like button, leave a comment. That really helps the channel, and share it with your relatives and friends, so they who are passionate about the markets but who cannot cannot make money. And as you guys know, I'm very transparent with the portfolio, and if I show you exactly where we are right now, you can see that why is this taking a while? You can see, let me show you this. Okay, you can see that over the last, yeah, I don't know, why is this not working? I wanted to show you the track records for transparency before we end the call. Let's see if I can do that successfully. Here we go. So you can see that the portfolio has just smashed it over the last 2 years, and I do expect this outperformance to continue, even though I do recognize the rate of return is very high. This equates to a 33% annual rate of return. In fact, if I go here to performance and if I expand this, you can see that let me change this to annual performance, because I want to make it very transparent, things very transparent for you guys. Look at this, almost 34%, almost a 34% CAGR, which is substantial, only with a few companies in the portfolio. Okay, so yes, I mean, just share this if you find it valuable, and let's speak soon. Okay, have a great rest of your day.